Chart patterns are recurring formations that signal potential price movements in financial markets. Recognizing these patterns helps anticipate trends and make informed trading decisions. This video will explore the fascinating world of chart patterns and shares secrets to finding high-quality double tops and double bottoms. In this video, we will discuss the structure of these patterns and the secrets to improve your win rates. Whether you are a seasoned trader or just starting out, this video will provide valuable information on how to use these patterns to your advantage. So it is important that you watch this video until the end to fully understand the patterns and their potential impact on your trading success. If that's something you're interested in, as always, hit the like button for the YouTube algorithm, subscribe, and turn on the notification bell to get notified when we upload a new video.
The biggest bull run of crypto is currently happening, with many coins or crypto tokens potentially increasing in value by 50x, 100x, or even 1000x within the next few months. To buy Bitcoin or any currency, one needs to find a good crypto exchange. The exchange KCX is a popular exchange but has an unlimited coin selection, including popular ones like Bitcoin and Ethereum. If you want to find altcoins at 1000x, you can find them on KCX. KCX is a popular choice due to its excellent coin selection and low fees. By signing up with the link in the description, you can earn up to $30,000 in free money depending on the amount you first deposit. Another great exchange for those unable to sign up with KCX is the 2-Bit Crypto Exchange, which also has a greater coin selection, and 2-Bit is still a great option for futures and spot trading. To deposit crypto, users can follow these steps outlined here by the exchange and deposit the desired amount. This exchange makes it easier to deposit crypto by selecting the desired crypto, and then also clicking here to select the crypto network, and copy the address, and within 2 minutes, users can own Bitcoin or other currencies. Then, after depositing the asset, you can start trading on the futures market and the spot market, and other opportunities KCX has to offer. After signing up to the exchange, you can come up to the upper side to claim the new user reward, deposit your assets that are about to get listed on the KCX exchange, and finally, to join the futures trading competitions. By choosing a better exchange and utilizing the best coin selection and fees, users can maximize their cryptocurrency investment opportunities. I'm going to leave the links to both the crypto exchanges in the description, so you go ahead and click the link, and then you can create an account.
Now, let's start with the double tops. So the double top pattern is a bearish reversal pattern, and double tops usually appear at the end of an uptrend when the buyers get exhausted and the upward momentum slows down. We see two tops around the same price area with a neckline in the middle. Now, in accordance with the technical rules, the double tops don't have to look precisely equal for the pattern to be valid, but as long as they look similar, the pattern is good to go. Then we can draw a line at the valley, which becomes the neckline of the pattern, and when the price breaks below the neckline, we can enter a short trade. Then we can place our stop loss right above the neckline of the double top and use the distance between the neckline and the top to mark our profit target. Now, the double bottoms are just the opposite of the double tops. It is a bullish reversal pattern. The pattern occurs towards the end of a downtrend when the sellers get exhausted and the downward momentum slows down. We see two bottoms around the same price area with a peak in the middle, and just like I said earlier, the bottoms don't need to be exactly equal, but as long as they look similar, the pattern's good to go. Then we can extend a line through this peak to create our neckline, and when the price breaks above the neckline like this, then the neckline becomes our entry point. We can then enter a long trade at this point, placing our stop loss right below the neckline of the double bottoms. We can measure the distance between the neckline and the bottoms. We project that distance above the neckline to mark our profit targets and wait for the price to either achieve our target or hit our stop loss. Now that we have reviewed the fundamentals of double tops and double bottoms patterns, let's go ahead and explore the 3 key strategies for identifying high-quality double tops and double bottoms. The first key strategy for identifying high-quality double tops and double bottoms lies in price action analysis. When studying double tops and bottoms, price action cues are essential. For example, in a double top pattern, the relative position of the second top to the first is a critical factor to observe. If the second top is slightly lower, it indicates a high probability of a short trading opportunity. This suggests that sellers are becoming increasingly dominant, preventing the price from retesting the previous high. This change from bullish to bearish implies a potential downward movement. As a result, traders who recognize this pattern early can capitalize on the potential decline by entering a short position. Understanding these subtle cues within price action can significantly enhance a trader's ability to anticipate market shifts and act accordingly. Here's an example. So here we can see that the price makes an up move, pullback followed by a final attempt for an up move, but this time the price fails to go above this first high. The price would have broken this high if the buyers were in control. Instead, the sellers who sold at this high were strong enough to overcome the buyers, so they pushed the prices downwards. Now, the lower top makes this a high probability pattern, so we enter a short trade on the breakout of the neckline. Now, moving on to the double bottom. A high probability double bottom pattern occurs when the second bottom is slightly above the first bottom. This indicates that the buyers who bought at the first bottom are strong enough to prevent the price from going lower than or testing the first bottom, which means that the buyers are in control and they are reversing the price even before it reaches the first bottom. So, this shift in trend from bearish to bullish indicates that the price is likely to rise, and as a result, entering a long trade like this is a good idea. Here is an example. Here we can see that the price makes a down move, a pullback followed by a down move. Now, the second down move is short-lived because it didn't even cross the first bottom, so the buyers who bought at this first bottom are strong enough to prevent the price from moving down. We see a double bottom pattern with a higher bottom, so we mark this neckline, and then we can enter a buy trade at the close of this candle. So paying attention to price action cues, such as the position of tops and bottoms, is a helpful strategy for recognizing high quality double tops and bottoms in real-time trading. However, price action cues may not always be present in every double top or bottom. And to solve this problem, we can utilize the second key strategy for identifying high quality double tops and double bottoms. Now, the key strategy number 2 is divergence. So divergence is one of the most effective ways of identifying potential reversals. Double tops and double bottoms are also an effective way of identifying a reversal. So spotting a divergence along with the chart pattern should give us a high probability trade. And for those who may not know, divergence occurs when the price and the indicator show different interpretations. A bearish divergence is when the price makes a higher or equal highs, but the indicator shows a lower high. This shows that the upward momentum has slowed down and we might be in for a down move. Contrary to a bullish divergence is when the price makes a lower or equal low, but the indicator makes a higher low. This shows that the downward momentum has started declining and an uptrend may be on the cards. Divergence can be spotted on different indicators, but in this video, we will be using the CCI indicator. Now, when we spot a double top pattern, then we can watch for divergence on the CCI indicator. Now we can see that the price made higher tops, but the CCI indicator made lower tops. This is a bearish divergence, and this divergence on the CCI indicator tells us that the momentum on the first up move was way higher than the second move. In other words, the price has lost momentum coming into this move. This tells us that the up move is over and there is a high chance of reversal. Here's an example. Here we can see that the price made an up move, a pullback, and a subsequent up move. The price creates two equal highs, which is a double top pattern, but here on the CCI indicator, we can see lower highs, which is a strong bearish divergence. Now that we have the confluence of a double top and a divergence on the CCI indicator, both of them indicating that the price might move downwards, so we can then enter a short position on the break of the neckline at the close of this candle, and as you can see, the price moved downwards. Now, moving on to the double bottom, when we spot a double bottom pattern, we should look at the CCI indicator for divergence. Here we can see that the price makes lower bottoms, but on the CCI indicator we see higher bottoms. So this is a bullish divergence, and this divergence on the CCI indicator tells us that the momentum on the first down move was way higher than the second move, which means that the price has lost momentum coming into this down move, and this indicates that the down move is over and an upside reversal may occur very soon. Here is another example. Here, the price forms a double bottom pattern with two equal lows, but on the CCI indicator, we see a higher low. This is also a bullish divergence. Now, we have a confluence of the double bottom and the CCI indicator divergence, both indicating that the price might move upwards. We then draw a neckline on the pattern and enter a long trade on this candle as it breaks the neckline. And as you can see, the price moved upwards after the entry point. Now, moving on to the third key strategy, which is the RSI Confirmation. Now, although RSI, a leading indicator, can be used to show price momentum and trade reversals, it is typically used with overbought and oversold levels above 70 and 30 respectively. But in this video, we are only going to make use of the RSI on default 14 period settings and the RSI line, so we will get rid of other properties of the indicator, and this allows for more accurate trading strategies. So here is a double top pattern. The second high is lower than the first high, which makes it a high quality double top pattern. Now we plot the neckline on the pattern, then we identify the candle that created the neckline and plot a line on that candle's RSI value. Essentially, we have created a neckline on the price as well as on the RSI. Now, the key strategy here is that the RSI neckline should be broken before or immediately the neckline on the charts breaks as well. So on this candle, the RSI had already broken its neckline. So this shows us that the momentum has already shifted downwards and the price will follow soon, and this becomes a high probability trade. So in a way, the RSI has given us a breakout signal before it actually occurs. Here is an example of a high probability double bottom pattern. So we can draw a neckline of the pattern from this candle. We then look at the RSI value on that candle and draw a neckline on the RSI as well. On this candle, we see that the RSI has already broken above its neckline, and this tells us that the momentum has already shifted upwards. So on this candle, the price finally breaks above its neckline and we can enter our buy position. And as you can see, the price made an up move after our entry and then hitting our take profit. These three key strategies for identifying high quality double tops and double bottoms that I have shared are just a few of many. With that being said, you can go ahead and deposit your funds and start trading with KCEX crypto exchange, because they also have some of the lowest fees on the market. And if you sign up using my link below, you'll get a free bonus of over $30,000 in trading capital if you deposit at least $100. Of course, you'll get more rewards as you deposit more. I hope you guys found value in this video, and if you did, please comment down below. Let me know the strategy you guys would like to use in the markets to trade. I would love to hear your thoughts. Please give this video a like and subscribe to this channel. Thank you so much for watching, and I will see you in the next video.